Okay, I think we're ready to start. Thank you very much, all of you, for joining. On this call today at the moment is not Emma Looms because she's out with a fire alarm. There's myself, Alyson Harding, and I'm joined by Steve Coomber. So we're going to run through the agenda that's on the list there. But first of all, we are going to have a poll. And I think the poll is going to pop up somewhere. Um, Gareth, I think, is going to organise that for us. And I don't know whether you are seeing it or not. I certainly can't. Oh, here we are. So we're trying to get a feel for what the audience thinks about how many wells, exploration wells only, so not appraisal or development wells, do you expect to complete in Norway next year? So you can only tick one box, and we'll see how what the feel for people's expectations are at the end of the presentation. So can we go to the next slide, please, Steve? I can't actually see the slide because it's got the poll in front of it. So what we're going to talk about today is the Norway State of Exploration report that was published last month, and it's a look back on the last 10 years to 2023 of exploration in Norway. And the contents page is there that gives you an idea of all the various bits of analysis that have been done for this report. Next slide, please. So just for those of you who are unaware of what Westwood offer, so myself and Steve work for the Atlas side of the organisation, and we look after everything ranging from exploration through to decommissioning in Northwest Europe area with a focus on Norway and the UK. And then if you go to the next slide, please. Our sisters in crime, so to speak, is Wildcat, and they look at exploration appraisal worldwide from a high impact well perspective, and we work very closely together to produce the products that we have. So next slide, please. Okay, so this is me now kicking off the presentation itself. Now, I really please add any questions you have in the Q&A box, and we will try and get back to them at the end of the presentation. So to start with, we're going to have a brief look at Norway in the context of high impact drilling worldwide, and this part is what we've got from our Wildcat partners which I just talked about. So over the last decade, there have been some exceptional global events coupled with growing political and environmental pressures that have played a key role in overall levels of exploration and production activity. Westwood's Wildcat service looks at these high impact wells drilled globally, apart from Russia and parts of China where information is hard to obtain. Westwood defines high impact exploration as either an exploration well testing a frontier play or a prospect or discovery with resources over 100 million barrels equivalent. Note that we don't count individual wells such as sidetracks, junked holes, etc. for the statistics. Instead, we count well programs that have all been drilled from the same top hole location. The exception for this is wells that are drilled from field templates. In the past, we've seen a pretty good correlation between high impact exploration drilling and the previous year's oil price. But despite oil prices of over $100 a barrel in 2022, we saw the fewest high impact wells drilled in 2023 for over 15 years. The correlation between oil price and drilling has broken. High impact exploration worldwide was pretty disappointing in 2023. We saw commercial success rates drop to 23%, which is the lowest since 2018. We saw the mean discovery size decrease to the lowest level since 2014. And we saw finding costs increase for the 5th consecutive year. We'll now look at Norway high-impact drilling in a global context. The left-hand pie charts are showing data for the last decade split by region, with pullouts for Norway, the UK, and Europe. The top left one is the number of high-impact wells drilled, and the bottom left one shows the discovered commercial resource. Between 2014 and 2023, 839 high-impact wells were drilled globally, discovering 87 billion barrels of oil. Norway accounted for 11% of these high-impact wells, but less than 1% of the discovered resource at just 555 million barrels equivalent. The right-hand charts are for 2023 only. 65 high-impact wells were drilled globally, a decrease from 82 high-impact wells in 2022. This decrease since 2022 reflects the energy transition strategies impacting exploration budgets, exacerbated by industry consolidation, increasing well costs, and reduced activity in previous exploration hotspots. 4 high-impact wells were drilled in Norway in 2023, making just one commercial discovery at Carmen, which has added about 95 million barrels equivalent. In Norway, there are disproportionately lower volumes discovered relative to the number of high-impact wells drilled, and this could be related to overestimation of pre-drill resources, plus the fact that Norway is a relatively mature basin. Additionally, 43 of the high-impact wells drilled in the Barents Sea, where, although discoveries were made, many are still stranded due to lack of gas offtake. Westwood is expecting a global total of 65 to 70 high-impact wells to complete by the end of 2024, similar to the 2023 figures. However, this story relates only to high-impact drilling. The focus in more mature basins, such as those in Norway, is now on ILX drilling or platform-led drilling, which may not encounter large volumes, but will offer good returns on investment. So go to the next slide, please. For the rest of the presentation, we will look at the full data set of wells drilled in Norway between 2014 and 2023, including both high impact and ILX. This slide has some key exploration metrics for Norway. The well density map on the right shows a high concentration of wells drilled in the more mature basins, especially the northern North Sea, with fewer wells in more frontier areas. The chart shows the number of exploration wells drilled per year, coloured by basin, as well as annual exploration drilling spend. A total of 289 wells were drilled on the NCS in that time period at an estimated drilling cost of about $12.1 billion US. The most active year was 2019 with 42 wells, and the least active years were 2017 and 18 with 21 wells each. The number of wells has remained relatively flat over the last 3 years, at 28 to 29 wells per year. The northern North Sea has had the highest drilling activity, with 119 exploration wells, followed by the Norwegian Sea, then the Barents Sea and the central North Sea. The average commercial success rate was 28% for the decade. 80 commercial discoveries were made, with total resources of 2.5 billion barrels equivalent at a drilling finding cost of $4.8 per barrel of oil equivalent. I'm now going to hand over to Steve, who's going to give you more detail on Norway. Over to you, Steve.
Thank you, Ali. Right, this next slide looks at Norway exploration performance, and as you can see, the left-hand chart shows the number of wells drilled per year, and that's coloured by result, as well as annual commercial success rate and technical success rate. A total of 80 commercial and 69 non-commercial discoveries were made from 289 exploration wells drilled, and this equates to a commercial success rate of 28% and a technical success rate of 52% for the decade. Annual commercial success rates have varied from a low of 6% in 2015, when only 2 of the 34 wells made a commercial discovery, all the way to a high of 55% in 2023. There has been a general upward trend in commercial success rates since 2015, with the average increasing from 21% in the first half of the decade to 34% in the second half. And this trend correlates with the increasing proportion of ILX wells being drilled, which are generally lower risk, and even small discoveries can be commercialized. Now looking at the right-hand chart, and that shows total resource from commercial discoveries each year, colored by phase, as well as the drilling finding cost per barrel of oil equivalent discovered. The average annual discovered resource for the decade is 250 million barrels of oil equivalent, but this has varied considerably, with a low of 70 million barrels in 2017, all the way to a high of 570 million barrels in 2021. In 2023, 430 million barrels were discovered, with the largest being Wellesley's Carmen well. However, recent discoveries still require appraisal drilling, and the volumes are likely to change. Many companies have stated that they are increasing their focus to explore for gas. However, we are not necessarily seeing this trend materialize yet. Of the 2.5 billion barrels of oil equivalent discovered over the decade, 61% is liquid and 39% gas. The phase split dropped as low as 27% liquids in 2015, which was a low-performing year, and reached as high as 80% liquids in 2018. Annual drilling finding costs averaged $4.8 per barrel of oil equivalent over the decade, but ranged from a high of $28 per barrel in 2015 to $1.7 per barrel in 2021. There has been a general decrease in finding costs across the decade, and this is commonly in line with decreasing rig rates. This slide looks at resource progression, and the charts show the development status of the commercial discoveries made in the decade. Of the 80 commercial discoveries made, 12 are now producing and 15 are under development. A further 6 are considered by Westwood to be near-term developments, where plans are advanced and PDOs either submitted or are expected to be submitted soon. Companies have highlighted that plans are progressing for the remaining 47 discoveries, but uncertainties still exist. Most of the older discoveries have progressed to production or are under development, but more recent discoveries have not had the time to progress as far, with many still needing appraisal to firm up resources and development concepts. This next slide demonstrates the perennial issue of overestimating pre-drill resources. The chart shows pre-drill versus post-drill commercial and non-commercial resources for wells from the last decade, where both pre-drill and post-drill volumes have been released by the operator, JV partner, or the NOD. And recent wells, high-impact wells, and outliers have been labeled. And we can see that pre-drill resources have consistently been overestimated, with a few exceptions such as Norma, Bergnap, and Ostfrig Beta Epsilon. We now look at performance by basin, and of the 4 basins in Norway, the Northern North Sea not only saw the most exploration through the decade at 119 wells, but it was also the best performing basin in terms of commercial resources discovered, commercial success rate, and drilling finding cost. 48 commercial discoveries were made, with a total resource of about 1.4 billion barrels, giving a commercial success rate of 40% and drilling finding cost of $3.5 per barrel. Success in the Northern North Sea is partially attributable to the basin having the highest proportion of ILX wells, but also that it has highly prospective geological play fairways. The Central North Sea is the poorest performing basin across all the metrics, and it has the lowest commercial success rate at 14%, having only made 6 commercial discoveries from 44 exploration wells. Discovered resource from the basin is also the lowest at 145 million barrels, resulting in the highest finding cost at $12.4 per barrel. The Norwegian Sea ranks in the middle of most performance indicators, apart from technical success rate, which is the highest for all 4 basins at 57%. There were 74 exploration wells drilled in the Norwegian Sea, discovering 630 million barrels in 24 commercial discoveries, and this gives a commercial success rate of 24%. Of the total discovered volumes, 57% was gas, which is the highest gas to oil ratio of all the basins. And then finally, the Barents Sea has historically had a low commercial success rate, reflective of the frontier nature of the basin, and only 8 commercial resources have been made in the last decade, with total discovered volumes of just 330 million barrels, which is not material compared to discoveries made prior to the decade. The 2 largest discoveries, Drivus, which is now part of Johan Castberg, and Alta, were both made in 2014. And since then, all commercial discoveries have been small at less than 40 million barrels. And these are adding volumes to existing infrastructure at Johan Castberg and Goliath, or possibly supporting a potential new hub at Wisting. There have been larger discoveries made during the decade, such as at Intrepid Eagle and Lupa, which were both more than 100 million barrels, but they are not currently considered commercial due to the lack of infrastructure and gas offtake solutions in the Barents Sea. And then we're looking at the map and charts on the right-hand side, and these show a comparison of the individual basins across the 2 halves of the decade. All basins showed an increase in commercial success rate from the first to the second half of the decade. Discovered volumes in the northern North Sea and Norwegian Sea are both more than doubled, and finding costs fell by 70% across the 2 halves of the decade. And in contrast, commercial volumes discovered in the central North Sea and Barents Sea halved. Moving on to performance by play, there were 12 different plays targeted in the last decade, and note that many wells have more than 1 primary target or multiple secondary targets, but only 1 primary target is used in these statistics. The charts compare the 2 halves of the decade for each play, looking at well count, commercial success rate, and discovered commercial resources. The Middle Jurassic is the most drilled and best performing play in terms of discovered resources, and makes up 46% of all resources discovered in the decade. It is one of the better understood plays, generally in easily imaged faulted traps and targeting mature basins. The play saw an increase in both commercial success rate and volumes in the second half of the decade, and this was partially due to successful drilling around the northern North Sea Troll and Fram areas, along with Norwegian Sea discoveries at Dvalen Nord and Bergnap. These more recent wells, however, are yet to be appraised, so volumes may yet change. The Upper Jurassic was the second most targeted play with 62 wells, and the play saw commercial success rate increase in the second half of the decade, also with several discoveries in the Troll and Fram area. And other plays of note are the Eocene and Lower Cretaceous, where commercial success rates have been high, but volumes relatively low. In the Eocene, however, volumes increased dramatically in the second half of the decade due to several discoveries in the northern North Sea. Right, next slide looks at performance by high impact versus ILX. And ILX is defined as exploration aiming to discover hydrocarbons that can be tied back to existing production infrastructure, rather than to create a new standalone production hub. And then, as Ali mentioned, high impact wells are those targeting prospects greater than 100 million barrels or prospects in frontier plays where there have been no previous commercial discoveries and are considered play openers. Just note that an exploration well can be classed as ILX, high impact, both ILX and high impact, or neither. So ILX drilling has accounted for 70% of all wells in the decade, and most companies have adopted increasingly ILX-focused strategies, looking to add volumes to existing infrastructure and increase their focus on lower risk, short cycle opportunities. Of the 203 ILX wells drilled in the decade, 73 made commercial discoveries, giving a commercial success rate of 36% for the decade, which is significantly higher compared to high impact and frontier wells. The annual commercial success rate has been consistently above 25% each year, except for 2015, which was only 5%. Commercial success rate and technical success rate have broadly improved across the decade, with increasing ILX activity, with the highest commercial success rate seen in 2023 at 55%. A total of 2.2 billion barrels of oil equivalent have been discovered through ILX wells, which is 88% of the 2.5 billion barrel total discovered resources from 2014 to 2023. High impact drilling has dwindled through the years, with a high of 53% in 2014 and a low of 14% in 2023. In 2023, there were only 4 high impact exploration wells, but these were also classed as ILX. There were only 7 commercial discoveries made from 100 high impact wells during the decade. However, only 2 of these were more than 100 million barrels post-drill, and total resource discovered from these wells was 555 million barrels. I will now hand over to Ali to talk about company performance.
Thank you very much, Steve. So of the 77 companies that participated in exploration drilling in the NCS in the last decade, 31 of them participated in either 10 or more wells over the decade, or 5 or more wells in the last 5 years for more recent entrants to the Norwegian Continental Shelf. These 31 companies drilled a net well count of 250 out of the total of 289 gross wells. Excuse me. The bubble plot ranks the performance of the 31 companies based on commercial success rate, drilling finding cost, and net commercial resources discovered. The ranking is not definitive, but a useful combination of overall net equity, size of resource discovered, success rates, and well costs. All but 2 of these companies made at least 1 commercial discovery, with an average commercial success rate of 30% and an average net commercial resource of 77 million barrels per company. Equinor was not only the most active explorer, but also discovered the most net commercial resources of about 680 million barrels of equivalent, which is 27% of the NCS total. Vår Energy discovered the most resources of the independent companies with 182 million barrels equivalent from 33 gross wells, giving it the lowest net drilling finding cost of about 1.66 barrels of oil equivalent US dollars per barrel of oil equivalent. Wintershall Dea, DNO, and Wellesley all had net drilling finding costs of less than $2 per barrel oil equivalent. If we go to the next slide. Thank you. Drilling on the NCS remains buoyant. At the time of publication of the State of Exploration report, Westwood expected 47 wells to be operating during the year. Since then, a couple have been postponed to 2025, and we currently hold 44 wells, exploration wells, and 8 appraisal wells expected to be operating during the year, but not necessarily completing by year end. In total, 22 companies are expected to participate in exploration drilling in 2024, with Equinor, Aker BP, and Vår Energy continuing to be the most active explorers. The chart is an exceedance curve for wells drilled in the last 10 years to 2023, with commercial discoveries in green, non-commercial discoveries in orange, and those labelled on the right-hand side of the chart have volumes higher than the 10% probability of exceedance of commercial discoveries from the last decade. In the first half of this year, 15 exploration wells completed, making 6 discoveries with the resources of 86 million barrels equivalent. These discoveries are labelled on the left-hand side of the exceedance curve. Although the commercial success rate of 40% for the first half of the year is above the 10-year average of 28%, discovered volumes are significantly down, with all of the discoveries being small, with an average size of just 14 million barrels equivalent. The three largest discoveries in the first half of the year were Carissa, Cuvette, and Ringhorn Nord. In the second half of the year, 4 further exploration wells have completed, 2 in the Barents Sea making small, potentially commercial gas discoveries. The Hayden Mon well in the Norwegian Sea was recently announced with a sizable gas discovery with resources of about 88 million barrels equivalent. And there are currently about 3 exploration wells to drilling and a further 23 wells expected to spud before the end of the year. Most of the wells in 2024 are ILX focused, which continues the general upward trend in ILX drilling seen over the decade as companies look to add volumes to their core hubs. 3 of the ILX wells are also considered to be high impact, and there are a further 2 high impact wells and 2 wells that are neither ILX or high impact. Westwood expects an increase in activity this year in the Barents Sea, with a total of 7 exploration wells, which will be the highest number since 2017 when 10 wells were drilled, and substantially higher than the last couple of years that only saw 4 wells in total. However, most of this year's wells in the Barents Sea are ILX around Goliath and Johan Castberg, or in the Wisting area in an attempt to boost resources that could support a new hub. 2 of the ILX Barents Sea wells are also classified as high impact and frontier wells. The Vår Energy operated Venus well completed last month and only encountered gas shows in poor Paleocene reservoir. The Elgol well is yet to spud. So to wrap up, the future looks bright for exploration activity in Norway. ILX drilling is likely to dominate drilling in the coming years, with less emphasis on high impact prospects. An exception might be in the Barents Sea, where there is still potential for large discoveries. But will the Norwegian offshore directorates please for more exploration, especially in frontier areas such as the Barents Sea, and specifically for gas, be heard? Or will companies stick to lower risk ILX drilling? So if we can go to the next slide, and I'm going to I'm not going to hand back to Emma. I'm going to hand to Emma, who's now back in the office, having returned from her fire alarm practice.
Thanks, Ali, and thanks, Steve, as well. Thank you both. Really interesting presentation. Before we dive into the Q&A session, we've got about 10 or 15 minutes for that. We've got another quick poll for you. So I'm sure Ali mentioned at the start that all of the data and analysis that you've seen in the presentation today comes from our Atlas and Wildcat products. So if you'd like to take a look at either of those and see how the information is pulled together and learn more about them, then please make a note yes, and we will be in touch very shortly to arrange that with you. Like I said, we do have some more time for questions. We've already had quite a few through, so that's great. Thank you. If there's any more to be submitted, then please do that now. If we don't manage to answer them all, I'm sure we can take a look afterwards and we'll get back to you individually as well. Okay, so I will end that poll there in a few seconds. I think for our first question, Ali, I'm going to come to you if that's okay. And that's with regards to the activity in the Barents Sea and how has the recent drilling lived up to the wish to find more gas in that area?
Okay, so I knew I'd get a tricky question from Henk, so thank you for that. Up to now, so this year, we've had 4 wells in the Barents Sea. We had the Hassel and the Ferdinand Nord wells that were to the east of Wisting, which were supposed to be finding oil, but they sadly found quite small gas pockets, which, as we said in a couple of slides ago, could possibly be commercial, but it definitely wasn't what they were expecting to find. The Venus well, which we've also mentioned, only had very limited gas discovery, and the Snoras well, also near Johan Castberg, was not a success. So up to now, that gas expectation has not been met, and the next wells are going to be drilled this year are also, they're not chasing gas necessarily. They're around the Goliath area, but I think the exploration we're hoping, or I mean, I think the industry is hoping that there's going to be more drilling in the more frontier areas where there is the potential for way more large discoveries, maybe gas, and the latest round awards suggest that there are companies who are interested in trying to pursue this. So hopefully that is a good enough, but we can always chat afterwards, Henk, if you want to discuss it more.
Thanks, Ali, and thanks, Henk, for the question. We've got another one here, Ali, with regards to the exceedance curve that you showed on the 2024 outlook slide. And have we split this up in any way by basin or play? Steve, one for you?
No, I think Steve. I think Steve can take that one.
You're on mute, Steve.
Unmute. There we go. Apologies. Yes, we have split this out by basin and by play. So by basin, for example, the Barents Sea has the highest volumes per commercial discovery compared to other basins. But obviously there are fewer discoveries than, say, the North Sea. And these exceedance curves are presented in the report, and you can also see the curves related to various plays where we have enough data.
Perfect. Thank you. Ali, do you want to take a look through and see if there's any you'd like to answer live in the chat? While I've got one more question.
Well, I can quickly answer one live in the chat from an anonymous person. Would you expect new and increased activity in the Boring Basin after the Hayden success? I think the answer there has to be that that companies who have got assets in that area are definitely going to look quite closely. It is a very exciting play. But so for those of you that don't know, it's a Cretaceous turbidite play in a relatively undrilled part of the basin. But it's a difficult play. But I would say yes, that I would expect more to be happening. And then another question. Do you expect exploration? No, should you expect any impact to exploration activity and players in Norway given the recent political changes in fiscal changes in the UK? My answer to that is, maybe I'm being a bit cynical. I would imagine that a lot of people who are operating the UK, and it's in the press, it's everywhere in the press. Everybody's so unhappy with the way things are. People are reducing their investments in the UK, and they might well look to Norway as an alternative where everything isn't as hostile.
Okay. Thank you, Ali.
That's all right.
One more question here on, have we done any analysis on the hubs as part of the report?
I can take that one. And the short answer is yes. Again, there's quite an in-depth bit of analysis in the report. Some of the highlights included, for example, the Troll Hub, which had the most exploration wells, at I think 20 wells, and this found the most resource of about 430 million barrels of oil equivalent. And then we had the Boulder Hub with around 8 wells, which had 3 commercial discoveries and around 200 million barrels. And then there was also the under development Johan Castberg Hub, which had the highest commercial success rate at around 80%. And again, yeah, there's loads more detail in the report.
Great, thank you.
Emma, I'm just going to answer Malcolm Brown. He's asking the question: is the Barents Sea really still a frontier basin? How many wells are needed for this to be no longer frontier in Westwood's classification? Being devil's advocate, is it just a poorly prospective basin over a large area? A very good question, Malcolm. And it's devil's advocate, cynical. I don't know. I don't know which way you put it, but I think the Barents Sea, in terms of its aerial extent and the number of wells that are in there, I think we definitely can still classify it as frontier. Most of the well concentration has been around the discoveries that have already been made, and based on the last round, mentioned it already, there are clearly the companies that have accepted these awards have clearly got some ideas for that basin. So, you know, let's hope it all works. You know, let's hope for some positive results from that area.
Thanks. So we've got about 5 minutes left, and what I think we'll do is we'll take 1 or 2 more questions, and then we'll flash up the poll results from the start of the session with your thoughts on 2025 activity levels, and I'll invite Ali and Steve to comment on that. But before we do that, one question around who do we think is the best performing company?
I'll take that. I think that's really difficult because it depends on what your measure is. As we've shown in the slides, you can look at commercial success rate, net volumes discovered, the average discovery size, the finding costs. But based on a ranking that we have put together, Vår Energy comes out as the top performer, and they are followed by Wintershall Dea, Wellesley, DNO, and Impex, Idemitsu. But it really does depend on how you measure it.
Another one on the company theme, how do company strategies impact on exploration performance and results?
Well, we have looked into this. So what we do is we look at where the companies focus on specific basins or specific stratigraphic ages, or whether they drill just ILX or a certain percentage of ILX, whether they drill high impact, etc. And most companies, as you'd expect, do have an ILX focus. So Vår Energy, for example, drill the most wells in the Northern North Sea with Middle Jurassic targets, and more than 80% of the wells were ILX. Going to the other end of the extreme, Lundin, before they were taken over by Aker BP, focused on higher risk prospects with high proportion of high impact wells, mainly in the Norwegian Sea, and had Middle to Upper Jurassic targets. So we do try and look at company strategies, yes.
Perfect, thank you. And I quite like this question from Axel Lundin, so I'll pick this one. If you were to drill one well in Norway, which area and play would it be other than the Middle Jurassic?
Thank you for that.
Tricky one.
Nothing like putting me in it. I'm a bit of a turbidite fan myself, being a geologist and an explorer by background. So I would definitely go for maybe a Jurassic, Upper Jurassic, or a Cretaceous turbidite play. Now you'll not know which area to do it in. Norwegian Sea, probably. That's a tricky question.
We'll let you think about it.
I need to think about it and go away. But yeah.
Great. Okay.
I think there's so much opportunity in Norway still out there, and that's, you can see from the number of wells that are drilled. Some of them in areas not so well drilled. Other in areas around, like for example the Fram Troll area. There's loads of wells around there, and they're making all these discoveries, which is really exciting in an area that's been relatively mature, but they're still finding things. So yeah, there's so much to play for out there.
Thanks, Ali. We've still got a lot of questions that we haven't got to. So what we'll do is we'll take those offline. We'll review them and drop you a note within the next few days on those. So I think just before we wrap up, if we could show the poll results on 2025 activity levels, and Steve, Ali, it'd be good to get your immediate reaction to these results. Any thoughts, comments?
Okay.
It's quite a broad mix.
It is I mean, I would. So based on we put this poll out before we actually gave the presentation, in the hope that you wouldn't be sort of guided by what has happened in the last few years. In the last few years, the last 3 years, it has been that 25 to 29 range. So the vast majority of people are putting it in the same bucket. So those who have said less, clearly pessimistic, and those that have said 35 to 40, I'm with you. I think we should drill that many wells. I think that's probably what I would expect to see. It'd be quite nice to get the more than 30, but yeah, I think that's kind of what I expected. Do you have anything to add to that, Steve? Do you think there's...
No, I was going to use the glass half full analogy too.
Okay.
Perfect. Thank you. And thank you everybody for your input onto that as well. Very interesting. So I guess just before we wrap up really quickly, a reminder that if you're a current Atlas client, you should be able to see the report within the Atlas product. So any issues with that, please let us know. If you'd like to register for access, again, please get in touch. And if you're not a current subscriber, but you would like more information or to discuss anything about what you've seen today, then again, drop us an email and we will be happy to get in touch with you. Any feedback as well on the presentation or our webinar series in general, again, we would welcome that to hear how we can continuously better serve our clients. So thank you. Thank you, Ali and Steve, and thank you everybody for your time. Thanks for joining, and have a good rest of your day. Thank you.
Thank you.